I think they'll still flesh out the idea of tapering the balance sheet. And I think the surprise, Joe, or the most likely thing you're going to see that's a little bit different here is how they move the dots on the dot plot. And I'm willing to suggest that one of the surprises might be you'll see more dots move inward in time as to when rates are going to lift off the zero bound. So that to me will be something to watch for. I'm not sure we'll get, given all the background noise right now, much more definition, although we might, of when they might begin tapering. And the issue with tapering here is also the speed with which it's done. It's going to be done over a 10-month period, as it was before, over a 1-year period, over a shorter period, a longer period. Those are the kind of things I think can be articulated, and I'm not sure we will get them at this meeting. But we will get a change in the dot plot, and I think that'll be noticeable.
A lot of market participants saw some Jackson Hole because they said that Powell had clearly delineated the difference between the beginning of tapering and actually raising interest rates. What you're saying right now is that that's not what should have taken from Jackson Hole. That rates will rise sooner than we had anticipated. Is that going to be problematic?
Joe, that's not what I'm saying. I'm saying the committee will plot their forecast, and I'm guessing that there's a significant probability, not 100%, that forecast of when rates will rise will move forward in time closer to 2022. This will also be the first time we have 2024 in the plot. So now, Powell goes out of his way to make sure that we don't emphasize the dot plot too much, but people do notice. I'm a former dot, I'm a retired dot, and it's kind of a highly subjective, silly exercise in my view. But that's the only way you get a sense of the way the committee's thinking at this moment when it's plotted. So that's the only thing I would say might be a little bit different here. I don't expect the language to change a whole lot. There'll be some commentary. We do know this, Joe. COVID-D is beginning to roll over. We're seeing it in the data. And that might give a little bit more encouragement that the economy still is doing fairly well, slowing down significantly in the quarter. But we had a robust July and a little bit of a slowdown in August. So if this rolls over, then we should have better economic performance than is being projected right now in the fourth quarter.
We're not. So then we're still not seeing a true price discovery mechanism in the 10-year then, because if what you're saying is happening, then it's still nothing's happening there. Wouldn't you expect something to start happening there? If it wasn't being, for lack of a better term, manipulated by the Fed.
Well, I think the market's fairly complacent right now. The business of tapering the balance sheet has been well discounted in the marketplace. We are an attractive place to be. The German bund still is a negative 10-year yield. Europe's come off a -4 a little bit. And one thing to watch, Joe, is if you saw yesterday during this minor Minsky moment in China, the dollar strengthened. DXY is above 93. So every time we have one of these shivers go up the spine of the global market economy, we see a stronger dollar. That indicates to me that there's still an appetite, and if the Europeans, which I expect, will continue to accommodate the ECB, then that just gives more buying power into the dollar and even into the 10-year treasury.
Richard, what do you make of all the hoopla about Kaplan, Powell, personal accounts, personal finances, and what, do you think there needs to be, greater, should there be regulations? Should they not do anything? I don't know what, I made the point where they can't even own dollars as their, because their actions influence even the dollar. So what can they own?
So Bill Dudley, the head of the New York Fed, and I went through this as well. We were heavily scrutinized and attacked because that was the first time they released the kind of holdings that we had in broad brackets. I've been there before. It did not influence my decision making. Kaplan and Rosengren have announced that they're going to just get out of those securities entirely.
All right, folks, let's get into it, because he just So he's backing the Fed presidents because of what I went over yesterday about how Rosengreen and Kaplan have owned the securities on the firms that the Fed was purchasing their MBSs from. So the fact that he just said, "Oh, well, I mean, they are selling them." Yeah, of course. After you made your profit and got really rich off of knowing exactly what to do. Now, that's BS, but it is what it is. What are you gonna do? So, big thing is how the Evergrande could trigger a crypto crash. Now, I'm not big into crypto. I actually have friends and other people that are more into crypto than I am, but Tether, right, is a strong liquid and conservative portfolio with an emphasis on safeguarding their reserves. The vast majority of the commercial paper held by Tether is in A2 and above rated issuers. So, what happens is that if a commercial paper meltdown in China would rock other sectors much more than stable coins, pension plans would be affected, and stable coins hold an actual decent portions of their assets in fiat currencies. So the Chinese banks right now, if they don't bail out Evergrande, will be much bigger than just a paper meltdown. So so it could be because of they were liquidating to be cash, or it could be people were facing margin calls, but China is big into mining in the crypto world. So to me, I mean, who knows what goes on behind the scenes in China, but that's just something to be mindful on, is the way that everything falls into one another. So I actually do hold some crypto, but I do not trade it, and I trade it due to the fact it's not my forte. So that is why I don't do it, because I'm in it for the long haul, and I do believe that crypto will be the new age of maybe not currency, but definitely if the U.S. defaults, right, because of this $3 billion of debt from the Evergrande, right, and the debt ceiling for the budget, and we have like 29, I think it was the U.S. debt that we have to pay, right? Here, I'm gonna be transparent with you guys, so you know that I'm not just like throwing shit at the wall, right? So U.S. Debt ceiling. So if this is going to be big, because whenever this happens, it's pretty much a game of chicken. Who's going to fall first? Who's going to give in? The Republicans don't want the Democrats to inflate their debt, because they have to pay debt all from 2020 and now. So with Republicans vowing not to approve more debt, what will be happening? Now, the thing that you have to take into consideration is that it needs to be passed by October 1st to avoid the government shutdown, right? Now, that would be the third partial shutdown in the past decade, which would suspend the nation's borrowing limit until after 2022 elections. So, since the Senate Republicans oppose any increase in the federal borrowing Um, they think it'll be catastrophic if they raise the limit. So they don't want to raise the limit without spending cuts, which, I mean, where are the spending cuts going to come from? Is it going to come from Medicaid? Is it going to come from Social Security? Is the spending cuts going to come from, let's see, foreign interest? Is spending cuts going to come from, let's see, giving people free money? Or what, like, how are they going to limit or cut spending cuts, right? When A, people need money at the moment because of what's going on, and B, everything that we've done so far has been because there's been no spending cuts. We've just been inflating the economy ever since COVID has happened. So let's see what this article is all about. So, provide money to address natural disasters, including flooding, wildfires in many regions of the U.S. So, what this is telling me is that this is like primarily in the West Coast, right? There's a lot of fires that have been going on the West Coast or even Central. Not that much, but there has been some. So, another thing that I want to point out is it also would contain money to help the resettled recent Afghan evacuees. So, not really sure if that's pertaining to the refugees or the US citizens that we evacuated from Afghan. So, like, don't get me wrong, if they were living in Afghanistan, right, but they're working for the US government, they everything that they left behind is there. So that's a huge thing. If it's for the US, I got to look into this more. So that's something that I will definitely do. But with the debt limit battle possibly preventing the multi-pronged bill from passing, some experts have raised hopes a standalone debt limit bill could be crafted, perhaps winning Republican support with future deficit reduction steps after restructuring the debt limit. So, how are they going to utilize this infrastructure bill and pretty much cut spending cuts? So, this is something to be very, very mindful of because the U.S. has some serious debt right now. And if we default on that because we can't increase the debt ceiling, then something very bad will be happening. And this is why I don't think the Fed is going to start tapering yet. I think today we might see a little rebound in the morning and then a drastic sell-off again. Who knows? I'm not an expert. That's just my opinion. But as we look down on this article, right, let's just go through it together. So McConnell suggested that the debt limit be passed through a budget reconciliation bill that Democrats would pass without Republican support under a special procedure. So this sounds like a little bit of House of Cards, right? So I remember when Kevin Spacey was the president and a catastrophic disaster was about to happen, and I believe it was a storm. It was a natural disaster, and the Democrats in House of Cards went behind everyone's back and went to the Senate to pass the emergency bill. So this is something like that, right? Like, people think entertainment is just for entertainment, and they're not wrong in certain aspects. But the devil is always in the details, and you just have to, like, you just can't be so naive about everything. Because right here, let's see what Schumer said. Anyone who says this is Democrats' debt is not talking fact. They're talking fiction. Both sides have responsibility to pay for the debt we already incurred. Now that is true. The debt has been increasing every single year pretty much in presidency, right? I mean, when Trump was office, he invested millions into our army and military. So that's actually huge. And that's just something that you have to be mindful of, because it's not just the Democrats, it's a little bit of both and everyone. So Democrats decided to go well, someone messed up. Since Democrats decided to go it alone. You work for Reuters, but you cannot write a correct sentence. So, they will not get Republicans' help in raising the debt limit, McConnell said. He's referring to the $3.5 trillion domestic investment program that the Democrats aim to pass over the Republicans' objections through the reconciliation of the debt ceiling. So, yeah, see, I was going to say 29, but it's 28.4 trillion is the debt ceiling. That's crazy. So, as this needs to get passed by October 1st before a government shutdown is likely to happen, this is definitely something to keep your mind or eyes on as we start another day in the markets. So let's just go over some economic data. I don't believe we have anything today. We just have, I'm pretty sure housing data. Yep, building permits, housing data, month over month, comes out at 8:30. So if I'm still on here, we will touch upon that. Tomorrow we got 30-year mortgage rates, as well as the applications and existing home sales. So those are things that I look for just for the overall housing market and the economy. And then we got oil, gasoline, the Fed, FOMC projection. So that's going to be big tomorrow. Now, I don't believe they talk today yet. So they talk tomorrow, and then Thursday, same old jobs data, as well as some PMI data, along with Friday finishing up with Jerome Powell speaking on the FOMC meeting and where monetary policy will be heading in the near future. So let's take a look at futures. So futures are all up right now. So like I said, I definitely see a rebound today in the short term, but then selling off later on today. And the reason being is is the VIX. VIX is actually down right now, as well as the dollar is kind of stable. I mean, it's a little down at the moment, but it is at that high. Once it crossed over 93, that was a big deal. So the fact that it actually dipped to that low 93s right now, that's an okay sign as long as it doesn't drastically shoot up. And if that does happen, we have to pay attention to the 10-year. So 10-year dropped after rising a little bit 2 days ago, so Friday, and then came back down today. So something to keep your eyes out for, as we have natural gas down, but crude oil is up right now. We have some orange juice, coffee, lumber down at the moment, and then grains. This is something that I watch out for, as commodities could definitely be severely affected by what's going on at the moment. And what I mean by that is as the dollar does rise, you could probably see a dip in the commodities, but then once the dollar falls, you could definitely see a rise in the commodity play. So that's definitely something to be mindful at, as we have the 1 day relative performance, right? But this is futures, so we have the VIX down, wow, 3.73%, is that right? Oh, it's at 4.14 at the moment. So that's volatility, and that's a good sign that it did come back down, because if that rises, that's indicating a further sell-off coming, or just volatility in that aspect, like for instance what we saw yesterday. And we have the NASDAQ, the Dow, S&P, Russell, all indices up. So got to pay attention to what China is going to do with Evergrande. I believe they're supposed to be passing or coming out with a statement by the end of this week, because they have to pay, or they won't be able to pay their debt by, I think, the 24th it was. So something to be mindful about as things are getting more real and catastrophic, and there's just all this BS political talk. So you got to be extremely careful when looking into these markets. And this is just another future map, shows it a little differently, and I kind of like this one as well, just because it shows you the percent. It just doesn't show you what it finished for the day, and that's something that I like. And yeah, so let's get into some stocks. So we have the S&P right now. So yesterday I brought out that around 415, a lot of these stocks bounced at 415, which I find extremely odd that a lot of these movements were like that. I mean, just because that just tells me that someone or people know something that I don't know, and I want to figure it out. And so looking at the 30-minute chart right now, we do have momentum pushing upwards, but let's see how today goes, as we did dip yesterday below the 200-day moving average, as well as the 50-day moving average, so on the 4-hour time frame. But what really, I mean, I show the 30-minute and the 4-hour for everyone that's watching, just so that you could see the intraday movement. But what really matters is the daily, weekly, and monthly time frames. Why? It's just because the long-term trend normally holds true, other than the shorter-term trend. So looking at this week, right now, this was the first time we dipped below the trade line on the weekly time frame, touching that 20-day moving average. So that was something to be very mindful at, as we did hold the low 43, right? Low was 43.0591. So right here we came down and held July 19th dip. So maybe this does hold support right there, or maybe we do see a more drastic sell-off. If we do, let's zoom out to the monthly, because I don't think this the damage is done. So right here, right, we have a low of 43.05, which was yesterday, and from that aspect, that 43.05 number came from July, right? So That's right in this month, and you did see we came down, we touched the 5-day moving average. So the momentum, EMA, that's, to be honest, I'm okay with that, because if we're moving upwards above the 5-day moving average for so long, there has to be somewhat of a little pullback just to slow down that rapid acceleration, because you just don't want to just see a run up for a long period of time with no pullback to pretty much regather all the momentum in order for it to make a move higher. Because when people emotions get to them and they're looking at the stocks, right, and they see the stock is at an all-time high, what is going to prevent them from getting in? The price, right? If like what, February to August, we just had green months. But when you look at from, let's go with April, right? Let's go with April to September. We had 1, 2, 3, 4 red months right now. And the thing that's crazy about that is, if we zoom out, right? So the thing that's crazy about that is, on those red days, we were still close to all-time highs, right? So the fact that the red days weren't even that bad just shows you how crazy this market is. Because there was 1, 2, 3, 4. So from May 20 to now, there was 4 times that we've touched this trade line. And to me, I mean, that's a very bullish move, but at the same time, that's also making me wait until we do retouch the trade line here. And if we do, that's about a 200 point drop off. So that is something that I'm being mindful at, because when we look at the daily time frame, right, we went all the way back down, like I said, to July 19th, July 20th. So the fact that that held support, that's a pretty good sign, because we did also hit an all-time high, and then we hit the trend line and broke through it. So what you just need to be mindful of is, on this rebound today, before getting in, wait half the day if you want to get in on a stock that you're looking at. Now, that's just my own personal opinion. Do what you want, but I like to be cautious, because the fact that we broke past the 50-day moving average for the first time in, let's see, since March 2021 was the first time, but we didn't even close below the 50-day moving average, which is a good sign. So the fact that yesterday was the first day that we actually broke through it. Now, back in October was it October? Yep. So October, we fell through the 50-day moving average. And September of 2020, we fell through the moving average. So this just puts it into a visualization, right? Now look at this drop off from in September 2020. We ran up, right? September 2nd, 2020. And let's see if I could actually fit this. I would like to fit this all together. Alright, it's going to be bunched, but it is what it is. I want that drop off. Am I going to get it? Is this September? Yep, September 2020 right here. So it's kind of weird how September 21st, right? September 20th of 2020, we dipped, we dipped below the 50-day moving average. September 23rd, dipped below, and then it was a rebound. We recaptured that 50-day moving average and then went upwards and onwards since. So now we've seen that dip, and we've went all the way down to 43.05. And if this sell-off continues, because I don't think that this is over, September historically is just a volatile month, and typically the second half of the month is the worst. So if this holds and we see a big rebound, maybe my eyes are watching yesterday's high. If we close, because we opened and that was the high. So if we regain that open yesterday and close above it, then that will be a good sign for a dip buy and that it's a strong buy. So be mindful when you're looking at those today. So as we look into the SPY is up $3 at this point in time. So as we're looking at the 30-minute chart, 4-hour, daily, and monthly, weekly, I'll change it. So same thing, yesterday we dipped below the 50-day moving average of the SPY, so correlating with the S&P, and then we dipped below that first price line, which was from August and then July 20th. So that is really showing that strong area of support from July 20th. And if we regain this price line, I would consider that is a bullish dip buy. But the only reason why I'm skeptical is because I could see today being green and then tomorrow being a massive sell-off until the FOMC minutes or Powell speaks happens and they talk about what monetary policy will be in the near future. So you just have to be mindful about that, because even though that this was a drastic breakthrough, stocks haven't fell from more than 5% in forever. I mean, not really forever, but I think it's been 9 months now, 8 months. So that's really, really big. And then when you look at the weekly time frame, you see that it looks like there's really nothing to worry about when it comes into terms of the monthly chart. This still looks like a bullish chart to me. You have to experience red days. Why? And because if things aren't, like, it hit a high of 454, right, in September. So like the fact that we hit a high and we have pulled back about $20 at this point in time, that should make it more attractive for new entries, because if you sold at the highest point, you buy at a lower point, right? Now, it seems pretty simple, but it is not, or everyone would be doing. So that is something that I look for when I zoom out, is what's the long-term trend looking like, because the monthly looks extremely bullish, right? But then the weekly looks all right. Now we captured that 20-day moving average, but we didn't dip below it. So that's telling me that there is support at the 20-day moving average, which obviously, like I've said, has coincided with July 19th and July 20th dip and rebound. So if this is a real rebound, we should recapture the trade line. We're at 437 right now, so that means we would probably move up about $2, maybe $3 to catch that 440 number. I don't think this is necessarily really bearish at the moment, but this is flashing some signals towards me on the weekly time frame that this is different. But like I said, we could have a roaring day today of a rebound, and then the market continues upwards still, because the sell-off makes everything more attractive. So if you're going to sell at the all-time high, why not buy in when it dipped about $27 lower, right? It makes sense, because if it does rebound, you're just going to make more money. Well, let's head over to the NASDAQ. So NASDAQ again on the daily chart slipped below the 50-day moving average. That worries me on the daily chart. Then you could see on the weekly time frame we've touched the 20-day moving average or came close to, but then we've closed right around the trade line. So that's a good sign for the NASDAQ. But if we do see an accelerated sell-off still as this decline still happens, I'm definitely looking for this key level of 14,111, and that's because of the last time we hit resistance. So that should be the next key level of support. And the reason why I say that is because look at, it took us 1, 2, 3, 4, 5, 6. This was the first day we closed above it, and then this was the second day. So it took about almost a whole 6 days for us to break through that resistance. So this should be where the strong support is, as well as the 13,039. Now that will be a drastic sell-off if that happens, but then again, the stocks are up from the lows about double their price. So if we do see a sell-off this drastic, about 200, not 200, I'm sorry, about 2,000 point drop off, I mean, this should trigger a rebound. But then again, I mean, people let their emotions get the best of them. So not too sure exactly where things are going at this point in time. Triple Qs are up right now about $3. So it's looking like a solid momentum upwards today at this moment in time, but I don't think it will last. So for the triple Qs, we did close below the 50-day moving average. We did hit a high, which was right at that moving average, but that was the last time that we saw that. So now that we are pushing towards 368, that's right around that 50-day moving average. So we'll be looking at that to actually close above it. If it closes above the 50-day moving average, this was a false breakthrough, and that is a really bullish sign. So the reason why I don't think this is going to last in the triple Qs is because interest rates are low historically, and the volume around this level should hold as support, because if it doesn't, like I said, we should see a real drop off back to what these May levels, yeah, around May. So the price level 2, so this is where we would see that dip in the triple Qs. So be mindful of what you are getting into. If it is technology, the cyclical plays, industrials, you have to pick the good solid stocks. So let's get into a few movers at this point in time. So this is a potential, wow, now this is crazy. This is a potential squeeze play, and as you can see, 8 a.m. it has taken off and it recaptured that 50-day moving average on the 30. But then here you have these crazy moves, and it seems like if we do open up above $20, we're coming right back up here. So this is looking like a big momentum play. When we're looking at the 4-hour, it seems extremely bullish, right? And so that is something that you have to be mindful of when looking at stocks. Is look how this was just a bull flag, and soon enough it was waiting, and it caught support at September 9th when it hit those highs, and since it broke it, wow, it is running right now. So this is definitely going to be a play that I am looking into today. I will definitely recap this later. So this is the one of my stocks on my radar today, as well as ATER, another potential squeeze play that I am keeping my eyes out on. And we have found resistance, or actually I shouldn't say resistance. We have crossed the 50% on the Fibonacci, which could be a sign of a reversal. And if that's the case, I could see us retesting that $15 range today. But then again, because of the market sell-off, I'm not too sure what will be happening. It could go, it just could make a run up until like 11 o'clock, and then you could see a drastic sell-off. So these types of plays you got to be very mindful about. And then AMC actually was down drastically yesterday, and then came back in the after hours and pre-market. I'm pretty sure it hit $41 or $42. Yeah, it hit 41.41 as the high, in or $41.66 was the high in pre-market so far. So I mean, AMC I'm always looking at, and if this holds today, because the 4 hour it's touching that 200-day moving average, and if this crosses below, that is a death cross, and I don't want to be a part of that. So when we look at the daily, right, we saw that we did touch the 50-day moving average, didn't close or didn't go below it, which is good. So today, if things hold true, I could see AMC touching that $46 mark, depending on how the momentum is. You got to take this with a grain of salt, because as you could see on the weekly and daily time frames, the MACD, the volume oscillator, and RSI are both showing bearish signals. But as the RSI is lower, who knows, buyers might step in, and then once the volume oscillator is making its moves up, that is going to show the price is rising. Another stock, Tesla. So Tesla is just one big cult, and I like Elon. I own Tesla in my long term, but the fact it had a massive sell-off, right, and now it's up, pushing that 735 range. So looking at it from the 4 hour chart, it already crossed the 50-day moving average there, but when you zoom out to the daily time frame, we recaptured, well, we slipped right through that 20-day moving average, which is no worries at this point in time, because we will be opening probably above that. So that's a good sign for Tesla investors as we zoom out to the weekly time frame, and it has been on this ongoing upwards, slowly but surely, trend right now, and it has resistance at that 750 mark at this point in time. So that's a key indicator. If we break over that 750 mark, which we have to push about $15 higher. So if that does happen, that's a key level to watch, because if that doesn't happen, I could see us dipping back down to touch the 50-day moving average on the weekly, and time will tell with that. Another short-term squeeze play that I'm looking at is SDC. So I actually bought in on the dip yesterday here, because the long-term signals are bullish, and even though I use the weekly really for for the indexes and ETFs for my long-term investment account, I typically don't use the weekly when I'm looking at certain, like if I'm looking at like a 1 to 3 day time period of a trade. I don't really look at the weekly. I do use it for some swing trades though, so just want to be mindful. You don't always have to be looking at the weekly, but when we look at the daily, we have my EMAs pushing over that 50-day moving average. Now we are trading below the 200-day moving average, so that is a big thing. And if we do hit $9.40, the sky will be the limit with this due to short interest. But all that needs to happen is the momentum from the buyer side needs to step in. If buyers don't step in, then this won't squeeze and it won't happen. So that is definitely something to be mindful at, because the 4 hour, see, this is the only reason why I don't like looking at charts sometimes. It's just because the pre-market data will signal some stuff, but then it could change as soon as market opens. So this is why, unless you're 100% certain in a stock from pre-market or after hours, don't just make a play because of FOMO. Do your research, wait, and be patient. And that is exactly what I'm doing. So I bought in at around $6 and 21 cents. So I mean, I ended up closing higher. So that's a good sign. That is a bullish sign to me, as well as the 4 hour chart. Now we did, was it yesterday? Yeah. And pre-market yesterday hit a high of $8.24, but that was all she wrote, right? Because we went all the way back down to $6.12. So that's a huge huge swing when you're talking about pre-market to the real-time trading hours. And that is definitely one that I am looking at ASAP. Oh my. So this is crazy. Hit 36. Now, see, like, you could get into this, but this is absolutely insane to buy into at this point in time. You want to make sure that you get in at a good price. So we will be rocking over this, and who knows what is going to happen with this. Now, if I take out level 2, let's see where the action, wow, yeah, people are in here for it. So this is going to be a huge play looking at today. Like I said, I could see a green morning and then a drastic sell-off to end the day, but I gotta run. This is all I got for you. Hope you learned something. If you didn't, I'm sorry. Tune in again, and you will. But thank you for watching, and don't forget,